What's up, everybody? A lot of people get wrecked trying to predict and trade trend reversals, trying to long the absolute bottom or short the absolute top because they see bullish momentum building up, they see money flow building up, just to have price dump even farther and continue putting in lower lows. The thing with trading is you are trying to stack the probabilities in your favor, obviously, because that is how you are profitable over time. Just think of a casino, right? They are able to be profitable because the odds are always in the house's favor. And one way that a lot of traders who are much better and more experienced than I, stack the odds in their favor in order to be profitable and win over time is trading with the trend, not against it. And let's look at Bitcoin for an example. If you look at the big picture, you can see that Bitcoin kind of goes through phases where it's in a very obvious uptrend, and then comes a phase where it's in a very obvious downtrend. And during these times, when Bitcoin is in a very obvious trend, the route to most probable success is trading with the current trend. While Bitcoin is in a downtrend, it's more likely that it's going to reject off of a resistance line than it is to hold a support line. So obviously, because of this, the odds are going to favor the shorts over the longs. And so, therefore, it would make more sense to try and trade with the flow of the market rather than against it. And the reason so many people get wrecked trying to long the absolute bottom is because you can see on the indicators bullish momentum building up as we are coming down and putting in new lows, but still it seems like the odds are still on the bears side because we are still having a hard time holding support levels, and we are still finding hard resistance at some of these resistance levels. And this is kind of something that I guess you just learn with being in the market. One of the tricks that is kind of used to take leverage from eager traders, oftentimes you can see the momentum building up for the bull side long before we actually put in a bottom, and that can confuse a lot of people. That can cause people to assume the trend is going to reverse, but then ultimately it doesn't. The trend ends up continuing to the downside. We could see some more bullish momentum building up. We think that the trend is reversing, just to have price come right back down to where we were before. And, it works the same the other way. You can see bearish momentum building up as we go on to new all-time highs. People shorting all of these tops, expecting it to be the absolute top, expecting a trend reversal, all got wrecked by this one last move up, and then eventually the trend did end up reversing. The price finally listened to what the indicators were saying, and we got the correction that the indicators were calling for. So because of this, I'd say it's much safer to try and trade with the current trend until it is confirmed that the trend has broken. And that's not to say that you can't trade against the trend, but you do have to be conscious of the fact that if you are longing in a downtrend, you have to play it a bit safer because overall the odds should be against longs and should favor shorts in a downtrend. And so you probably just want to keep that in the back of your mind and try and play it a bit safer when you're trading against the trend. For an example, and obviously I don't trade with real money, I only paper trade because trading with real money is extremely risky. But because of the fact that we are in a downtrend, and I noticed that we were holding this resistance line very well, it made it pretty easy to short this resistance line when I saw momentum obviously decreasing. When I saw the confirmations, any kind of confirmation like this very small 5-minute bearish divergence, I could feel really confident that we were going to reject off this trend line. Same thing right here. We were forming bearish divergences on the small time frames as we were coming back up to this resistance level, which made me pretty confident that we were going to reject off of it again. Basically, because the odds favored us rejecting off of this line over us breaking out of this line, that gave me a little bit more confidence in my decisions. Now, one thing to keep in mind, at least with Bitcoin, is when these trends reverse, when we see the confirmation of a macro trend ending, things typically happen pretty suddenly, and that can cause people to miss out. For example, I'm sure there's many people that tried to long all of these bottoms back here just to get stopped out with this final dip, and then they were unable to catch the trade that they were actually looking for. So even though it's a good idea to wait for confirmations of a trend reversal before trying to trade it, sometimes things can happen too quick for you to take advantage of them. But the way I like to think of it, it's better to miss out on a trade than for you to get absolutely wrecked trying to trade without much confidence. All right, everybody. Thank you so much for watching. If you enjoyed, please consider leaving a like and subscribing. I really appreciate all of the support. It means a lot to me. And I will see you all on Thursday for my next video.